Introduction. Hello, everyone. Welcome back. Today, we have an exciting topic to discuss: how to systematically invest a portion of your salary into the stock market. If you're looking to build long-term wealth and secure your financial future, this video is for you. Stick around as we walk you through a step-by-step plan to get started with regular salary investments in stocks. Don't forget to like, subscribe, and hit that notification bell so you never miss out on our valuable content. Now, let's dive in. Step 1. Set clear financial goals. 1. Before you start investing, it's crucial to define your financial goals. 1. Do you want to save for retirement, buy a home, or simply grow your wealth? Having clear goals will help you determine how much you need to invest and for how long. Step 2. Create a budget. 1. Next, create a budget to track your income and expenses. 1. Allocate a specific portion of your salary for investments. 1. Remember, consistency is key, so make sure you can stick to this budget over the long term. Step 3. Build an emergency fund. 1. Before you begin investing in stocks, establish an emergency fund with 3 to 6 months worth of living expenses. 1. This will provide a safety net in case of unexpected financial challenges. Step 4. Educate yourself. 1. Knowledge is power. Take the time to educate yourself about the stock market, different investment strategies, and the companies you're interested in. 1. This will help you make informed decisions. Step 5. Choose a brokerage account. 1. Select a reputable brokerage account that suits your needs. 1. Look for low fees, user-friendly platforms, and access to a wide range of stocks and investment options. Step 6. Set up automatic investments. 1. To ensure consistency, set up automatic transfers from your bank account to your brokerage account on your payday. 1. This pay yourself first approach makes investing a habit. Step 7. Diversify your portfolio. 1. Spread your investments across different industries and sectors to reduce risk. 1. Diversification helps protect your portfolio from market fluctuations. Step 8. Invest in index funds or ETFs. 1. If you're new to investing, consider starting with index funds or exchange-traded funds, ETFs. 1. These funds offer instant diversification and are often more stable than individual stocks. Step 9. Stay patient and avoid emotional decisions. 1. Stock prices can be volatile in the short term. 1. Avoid making emotional decisions based on market fluctuations. 1. Stick to your long-term plan and remain patient. Step 10. Regularly review and adjust. 1. Periodically review your investment portfolio and make adjustments as needed. 1. As your financial situation changes, you might need to modify your investment strategy. Conclusion. There you have it, a comprehensive guide to investing your salary regularly in stocks. Remember, building wealth takes time and discipline. Start small, stay consistent, and watch your investments grow over time. If you found this video helpful, don't forget to give it a thumbs up and share it with your friends.